We were talking about it as it was coming up like, oh man, if the Fed rolls back interest rates, we got a big show on our hands. And
in support of our goals, today the Federal Open Market Committee decided to leave our policy interest rate unchanged.
Quack, quack. Yeah. They did not roll back interest rates. In fact, they just decided to keep them steady. It feels like the economy is in a good place. Inflation is down. The numbers look good, but they cited something else. They cited uncertainty around tariffs before they roll it back. Is this just another example of the coil being coiled, GC?
Yeah. Ultimately, the coil that we've talked about is literally, we have seen the data show us that when interest rates rise on a percentage basis like they have risen, which does not have happened very often. The last time it rose like this was 40 years ago. And when that happens, and then they stay up higher for longer, all that's doing is it is taking home sales that would have happened this year, it's pushing off into future years. And ultimately what that's taking is home price appreciation that would have happened this year, it's pushing it off to future years. So yes, when you see a lack of an announcement or the Fed announcing that they are keeping rates steady, ultimately what that means is for that component of what drives our long-term interest rates, it's not going down. And so that means higher for longer interest rates. And that means ultimately it's taking the demand that would have happened today, pushing off for future years, which for us, for those who are not your average investors, who are clients of JWB, you are buy and hold clients. Yeah. You are buying and you are holding for the future. And so what this is ultimately doing is suppressing demand today. It will be realized in future years, and that's how it's going to affect home price appreciation.